Okay, good evening, everyone. The next major subtopic under our subject would be the annual profit plan and the supporting schedules. But in its essence, this subtopic would still be connected with budgeting. And part of the supporting schedules for your annual profit plan would be that the object for discussion this evening, which is the production cost budget. Okay, included in your annual profit plan and supporting schedules would be the other topics already discussed together with budgeting, such as your sales budget, your cash budget, and other forms of budget. Here, the focus would be on your production cost budget. We'll be focusing on the components of your cost, which would be the materials, labor, and overhead. Okay, so again, this is still under basically under budgeting, okay, as part of the supporting schedules for your annual profit plan. Okay, and for production cost budget, it's really just a matter of applying or following the specifications in the manufacturing process, which would be provided in the problem. So long as you know how to classify different kinds of cost, and so long as you know how to consider the targets, the beginning balances and the ending balance targets for your production, then you should be able to easily answer problems under this topic. Okay, so the best way to do this would be to simply answer as many problems as you can to practice answering problems and just to uh, absorb any new concepts that you might encounter as you answer these problems. Let's start with problem number one. The question here is if 24,000 wings are cooked and sold in this month, and each wing sells 80 centavos, what is the budgeted variable cost per unit? Okay, so if you look at the given problem, you're given with the total cost for your wings, breading, and sauce, which would represent your materials. You're also given the total variable cost for your uh, labor. You're given the total cost for your rent, depreciation, and other fixed cost. Okay, just focus on what is being asked, which is the budgeted variable cost per unit. So the challenge here on your part would be to determine which of these costs would be considered as variable or fixed cost. Okay, so uh, the first line here, which is your wings, breading, and sauce, which we've mentioned would represent your materials. Uh, Normally, your direct materials would behave as a variable cost. The more units you produce, the more materials that you would need. Yes, then for our direct labor, it is already specified in the problem that it is a variable cost. Okay, rent, as you should know by now, is typically a fixed cost. Regardless of the level of volume of production, your rent will remain the same. The same is true for your depreciation. And of course, the last item here, the other fixed cost, is obviously a fixed cost. So in this problem, we will be ignoring the 1,100, the uh, 900, and the 400. So we'll only take into account the variable cost. So our variable cost here would be your 4,900 and your 3,500. Okay, if you add these two, you would get 8,400, which would represent your total variable cost. Okay, but since we are asked for the variable cost per unit, we will divide the 8,400 total variable cost target by the target level of production of 24,000. This would mean that our variable cost per unit would be 35 centavos. So the answer there is 0.35. Okay, so again, the takeaway from this problem would be simply on the classification of your costs into variable and fixed cost. Okay, you're expected to know which costs are typically variable costs and which are typically fixed costs. Okay, number two, which of the following statements concerning a direct materials purchase budget is most correct? Okay, and the answer here is the second choice. The direct materials purchase The direct materials purchase budget is based on materials needed for production, beginning direct materials inventory and desired ending direct materials inventory. Okay, so of course, determining the amount of materials that you would need in budgeting for your direct materials that you will have to purchase, you will take into account the materials that you would need for production, and your level of production would depend. The amount of materials that you will have to purchase would depend on the existing materials that you have, which is represented by your beginning inventory. And of course, you will have to make additional. Purchases depending on your desired level of ending inventory. Okay. Let's take a look at the other choices and discuss why they are incorrect. The first choice here, the direct materials purchase budget is based on materials needed for production. That's the same as the answer. Beginning finished goods inventory and desired ending finished goods inventory. Okay, so your finished goods inventory will not have any impact on your uh, purchases. Okay, so uh, next choice, the direct material purchases budget is based on budgeted production, beginning finished goods inventory, and a desired ending finished goods inventory. Okay, here you should be taking into account your materials needed for production. Okay, so we going back to the first choice, we will no longer be taking into account the finished goods inventory because that is already considered in the materials needed for production. Okay, you can actually convert the answer into a formula to get the uh, budget for your direct materials purchases. You would start with your materials needed for production and then deduct the beginning direct materials inventory because since this is on hand, uh, this would reduce the amount of materials that you will have to purchase. Okay, but then you will have to add the ending direct materials inventory. Okay, so you can start from the materials needed for production, which takes into account how many you want to produce, which will also take into account your beginning in finished goods inventory and your ending finished goods inventory. Okay, but again, letter A, the first choice is not correct because the finished goods inventory are already incorporated in the materials needed for production. Okay, so you can start if we convert this into a formula. We can start with materials needed for production and then deduct the beginning direct materials inventory and add desired ending direct materials inventory. That will give us our direct materials purchase budget. Okay. And then as to the third choice, again, that is wrong because it talks about your finished goods inventory. Then the fourth choice is also incorrect because uh, it focuses only on the budgeted production. It doesn't take into account the existing inventories. So number three, all of the following statements concerning indirect materials purchase budget are correct, except so we're looking for the incorrect statement. So let's go over the statements. The first statement: as budgeted production increases, the amount of materials to purchase increases. Okay, that is obviously correct. The more you intend to produce, the more materials that you will have to purchase. Okay. Next, as desired ending direct materials inventory decreases, the amount of materials to purchase increases. Okay, this is incorrect. Okay, if the amount of ending materials decreases, if the target level of ending inventory decreases, then that would mean the amount of materials that you will have to purchase would also decrease. Okay, remember, if we go back to number 2, in getting your direct materials purchase budget or the budgeted direct materials to be purchased, the ending direct materials inventory, the targeted ending direct materials inventory would be a deduction. Okay, so the higher the target ending inventory, the more purchases. Okay, but the lower the target ending inventory, the lower amount of materials purchases. Okay, so that makes the second choice incorrect, which would make it the answer. Okay. Third statement, as beginning direct materials inventory decreases, the amount of materials to purchase increases. That is correct. If you have a few amount of inventories on hand, then uh, that would increase the amount of materials that you will have to purchase. As the amount of direct materials required per unit increases, the amount of materials to purchase increases. Okay, that's obviously correct because that would increase the materials needed for production. Okay, the higher the amount of materials needed for production, the higher your budget purchases would be. So again, the answer here is a second choice. Number 4, all of the following statements concerning a direct materials purchase budgets are correct, except again, we're looking for the false statement. Okay, first statement, as budgeted production decreases, the amount of materials to purchase decreases. That's correct. As desired ending inventory materials inventory increases, the amount of materials to purchase decreases. This is basically the opposite. Uh, it's the, it's the same thing as number 3. They just reversed everything. So this would still mean that the second choice is an incorrect statement. So the answer number 4 would be letter B, or the second choice. Number 5, all of the following statements concerning indirect materials purchase budgets are correct, except, again, we're looking for the false statement. Uh, First statement, as budgeted production decreases, the amount of materials to purchase decreases. Budgeted production goes down, so the amount to purchase also goes down. That's correct. That makes sense. I hope that makes sense to everyone. As desired ending direct materials inventory decreases, target inventory goes down, the amount of materials to purchase will also go down. Okay, all things held constant, this statement would be correct. Next, as beginning direct materials inventory decreases, meaning existing inventory decreases, the amount of materials to purchase also decrease. No, the lower number of materials you have on hand, the more materials you will have to purchase. Okay, so the answer here would be a third choice. It is the false statement. The fourth statement must be true. Let's check. As the amount of direct materials required per unit decreases, the amount of materials to purchase decreases. That is obviously correct. Number 6, Philip is a manager who oversees raw materials ordering, inventory levels, employee efficiency and productivity, and assembly line maintenance. Which of the following budgets would Philip most likely help develop? Okay, so the task of Philip is over ordering raw materials, overseeing inventory levels, employee efficiency and productivity, and also the assembly line maintenance. Okay, so obviously, if we start with the first choice, Philip has nothing to do with your selling and administrative expense budget. Philip is more on the uh, production. Okay. Sales budget also, Philip has nothing to do with that. Uh, By process of elimination, class, the answer here would be letter C, or the third choice, manufacturing overhead budget. Okay. Uh, Obviously, capital expenditure budget is not part of the scope of work of Philip. Okay. So again, the answer here would be manufacturing overhead budget. In a manufacturing overhead budget, it would detail the amounts to be paid from your overhead, uh, as mentioned in the problem: raw materials ordering, inventory levels, employee efficiency and productivity, and assembly line maintenance are all related to the production and the manufacturing process. Okay, so obviously the best answer here would be the letter C. Okay, and just as an additional tidbit, based on the information given, Philip could also be included in the preparation of your production budget, obviously, which will concern your direct materials budget, your direct labor budget, and your manufacturing overhead budget. Okay, so based on the functions performed by Philip, he is obviously involved. He will obviously be involved in the production budget, which would include the budget for direct materials, your labor, and your overhead. Next, number 7. Let's go to the question first. How many more full-time massage therapists does Healing Hands need to hire for the period from January to June? Okay. So let's read the given. From July to December, Healing Hands Massage employs 6 full-time massage therapists who each work 40 hours per week. However, they are busier from January to June as people redeem gift certificates that they receive at Christmas and as people pamper themselves after school is out or before a wedding. In order to fill all their massage requests, they require uh, 750 direct labor hours per week. Okay, and how many more full-time massage therapists does Healing has? Okay, so if this comes out, you should be able to figure this out. This is just basic uh, planning. Okay, you can just use basic arithmetic here. Each therapist can work for 40 hours per week, and the problem tells you that uh, in order for them to cater to all their clients during this period, a total of 750 contact hours is needed. So since you know that one therapist can provide 40 hours per week, and they would need a total of 750 contact hours from their massage therapists each week. So you just have to divide 750 by uh, 40, and this would give you uh, 18.75. Okay, but since this would require 18.75 therapists, but since you cannot have fractional or fractional or uh, uh, non-whole number of therapists, you cannot saying you will have 18.75 persons. Okay, it should be rounded up to one person. Okay, so basically you would need 19 persons. Okay, but the 19 is not among the choices because the problem also tells you that you already have existing 6 full-time massage therapists. Okay, so if you need a total of 19, then you already have 6. So that means you will need another 13. Okay, then you might say, can't 12 be considered as the answer? Okay, so if you employ only 12, you would not be able to reach, or you will not be able to cater or fill the needed 750 hours. Okay, so for example, you have 12, you add your existing 6, you'll have a total of 18, and each of these therapists can provide 40 hours of work. Okay, you'd only be able to achieve 720 contact hours from your therapists. So 12 would be an incorrect answer. So again, the answer here should be 13. Okay, number 8. In early March, just check if I'm still recording. Okay. In early March, Percy is preparing the budget for pickled beets for the upcoming quarter. Budgeted sales are 12,000 jars for April, 16,000 jars for May, and 19,000 jars for June. Each jar requires 1.2 pounds of beets and sells for 15. Percy requires ending finished goods inventory equal to 25% of the following month's budgeted sales. If the price of beets is 2% per pound, what is Percy's budgeted cost for beets for May? So basically, this would now be your budget for your materials, okay? Because we need the beets to produce pickled beets. Okay, so the challenge here would be, especially for those who never practice solving problems, is that they would be able to, some students would be able to consider that for your budget this month, you would have to include the target uh, next month, because as stated in this problem, uh, the company requires ending inventory to be equal to 25% of the next month's budget. So in this case, we are in the month of May. Okay, and uh, you need 16,000 jars for May, but you do not just budget for 16,000, because by the end of May, you must be ready, you must be equipped with 25% for next year's budget, for the next month's budget. And for June, the budget is 19,000. So that means you have to prepare for 25% of 19,000, which is 4,750. Okay. So by the end of May, you should have existing inventory enough to enough to cover 25% of 19,000, or you should have 4,750 jars by the end of May. So some would think that they would just need 16,000. They would need 16,000 plus 4,750. Okay, worst case, the most uh, unimaginative student here would simply focus on the 16,000. Okay, for those who have better reading comprehension, they would be able to include the 25% for next month. They will be able to include the 4,750. Okay. But the complete analysis here would be, aside from including in your budgeting the 4,750, you should remember also that by the end of April, April had already prepared for 25% of May. Okay. So you really do not need 16,000 plus 4,750, because April already prepares 25% of May's needs. So that means by the end of April, there is already 25% of the 16,000 jars for May, and 25% of 16,000 would be 4,000. Okay, so you really don't need the 16,000 plus 4,750, because you also have existing 4,000 by the end of April. And the existing 4,000 at the end of April is obviously available for May. So what you really need here is your uh, mm, your 16,000 minus your 4,000, which is on hand by the start of the month of May, and then you add the 4,750, which you will have to prepare for uh, June, which will give you a total jar of 16,750. Okay. Uh, okay. So you will need to prepare for 16,750 jars. Okay. And I hope you can recall the formula we mentioned in question number 2. We begin with the materials needed for production, then we deduct the beginning inventory, and then we add the desired or targeted ending inventory. So that's basically what we were doing here. The 60,000 needed for May, and then deduct the existing of 4,000 from April, and then add the needed 4,750 in June. Okay, but technically, these are not the numbers that we need for the materials. We're just using the budgeted sales. Okay, if we focus on the number of pounds that we will have to purchase, we will have to multiply these figures with 1.2. Why 1.2? Because the problem tells us that each jar requires 1.2 pounds of beets. Okay, so to get our total amount of materials to be purchased, we multiply the 16,750 jars by 1.2, and this would give us 20,100. Okay, and that is not in the choices because the 20,100 represents the amount of beets that we need in terms of pounds. Okay, but we're talking about budgeted cost for beets. We will have to multiply this cost for every pound of beets. And the problem tells us that the price of beets is $2 per pound. So we will multiply 20,100 by 2. This will give us 40,200. Okay. Again, to me, this is just a matter of common sense, class. If and these are not complicated. Perhaps the possible source of error here would be your failure to take into account the beginning inventory and ending inventory. Okay. Again, the answer there is 40,200. Let's proceed to number 9. Which of the following statements concerning a manufacturing overhead budget is correct? Okay. A production budget must be prepared before a manufacturing overhead budget, since the manufacturing overhead budget is based on budgeted production. Okay, this is correct. This is the true statement. Okay, so this must be the answer. The production budget comes first before your manufacturing overhead. The level of production should comes first before your production cost budget. Okay, the cost of the uh, production will come after you have already uh, established your uh, production budget. Okay, not just the manufacturing overhead budget, also your direct materials and your direct labor budgets. Okay, let's try to go over the other choices. A manufacturing overhead budget must be prepared before a production budget. That's wrong. A sales budget must be prepared before a manufacturing overhead budget, since the manufacturing overhead budget is based on budgeted sales. The first part of the statement is correct, but your manufacturing overhead budget is not based on budgeted sales, it's based on your production budget. A direct materials budget must be prepared before a manufacturing overhead budget, since the manufacturing overhead budget is based on budgeted direct materials. Again, that is also incorrect. Number 10, what is the relationship between the direct materials and direct labor budgets and the production budget? The answer here is the direct materials and direct labor budget depends on and are a function of the production budget. Okay, again, the production budget comes uh, first. Okay, you set the level of production first so that you will be able to prepare your direct materials and direct labor budgets. Let's go over the other choices. Again, the answer here is the first choice. Second choice, the production budget depends on and is a function of the direct materials. That's incorrect. That's the opposite. The direct materials budget, but not the direct labor budget, is a function of the production budget. No. The direct materials and direct labor budget have no relation with the production budget. Okay. Obviously, the last two choices, the last three choices are incorrect. Okay. So the only correct answer here is the first choice. Number 11, what is the relationship between the manufacturing overhead budget and the production budget? Okay, very similar to question number 10, and this should have the same answer. Okay, first choice, the manufacturing overhead budget has no relation. That's incorrect. The production budget depends on and is a function of the manufacturing overhead budget. No, again, as what we mentioned. Production budget first, then you will prepare your direct materials, direct labor, and overhead budget. Next, letter C, the manufacturing overhead budget depends on and is a function of the production budget. Again, that is correct. Okay, we've established that in number 10, which means the fourth choice must also be incorrect. The manufacturing overhead budget affects the sales budget, which then affects the production budget. That's incorrect. Okay, the sales budget affects the production budget, which then affects your manufacturing overhead budget. Okay, if we are to change the fourth choice into a true statement, it would be that the sales budget affect the production budget, which then affects the manufacturing overhead budget. Sales budget first, then production budget next, and then your production cost budgets. Your supporting schedules to your production budget. Number 12, KT has cleaning contracts for 15 apartments, 45 family homes, and 25 office buildings. She estimates that an apartment takes 4 hours to clean, a home takes 6 hours to clean, and an office building takes 10 hours to clean. Katie pays her cleaning staff at 12.50 per hour. If each location is cleaned once per week, how much does Katie need to budget for direct labor for each month? Okay, so one challenge here would be your failure to multiply your figures by 4. And again, this is really just a matter of common sense, class. Okay, you have 15 apartments, and you know that you need how many hours to clean one apartment? You need 4, so that would be 60. Then you have 45 homes, and you know that each home will require 6 hours to clean. So 45 times 6, that's 270. And then you have 25 buildings, and then each building requires 10 hours. Uh, mm, so that you would need 250. So far we have 250. Then add the 270 hours for the family homes. Then add the 60 for the apartments. So every week you need 600 hours to clean all these contracts. Okay. Then multiply this by the hourly rate of your cleaning staff, which is 12.5. 600 times 12.5. This would give you 7,500. Okay. But again, we're preparing for our monthly budget, so we will have to multiply 7.5 uh, by what's this 4. But I'm actually getting uh, 30,000. Let's double check. 15,000 times 4, you will get 60. and then 45 times 6, you would get 70, and then uh, you have 25 times 10, you will have 250. So 250 plus 270 plus 60, that would give you 580. And then let's just double check that. She estimates an apartment takes 4 hours to clean. Katie pays her cleaning staff 12.50 an hour if each location is cleaned once. Okay, so 580 times 12.5, 7,250. Where did we get 7.5 earlier? Where was there? Anyways, it should be 7,250 per week multiplied by 4. We'll have 29,000. Okay. So I think I just pressed the wrong number earlier. Okay, again, going back, you need 60 hours for your apartments. You need 270 for your family homes. You need 250 hours for your buildings, which will give you a total of 580 multiplied by the hourly rate of the cleaners. You'll have 7,250 cost per week for your labor multiplied by 4 to get your monthly. You will get 29,000. Okay. I know I said this is just a matter of common sense, so really you'll just get this wrong if you press the wrong numbers in your calculator. Next, number 13. If 24,000 wings are cooked and sold in this month and they sell uh, 80 centavos each, what is the budgeted total variable cost? Okay, again, somewhat similar with number 1. No, this is exactly the same as number 1. What was the question there? The same problem, but this time it's not per unit, it is uh, total. Okay. So again, the challenge here is just to identify which ones are variable costs, which ones are fixed costs. That's what we've mentioned. Your materials and your direct labor would be your variable costs. So your 4,900 plus 3,500 will give you 8,400. So the answer here is the third choice, 8,400. Next, Ellen is a manager who helps develop sales promotions, target customers for upselling, and searches for potential new customers. Which of the following budgets would Ellen most likely help uh, develop? Okay, so this is a question similar to the one we discussed earlier involving Philip. Philip was more involved with the production. Here, obviously, Ellen is uh, uh, connected or involved with your sales since she helps develop sales promotions, target customers for upselling, and searches for potential uh, new customers. Okay. So the answer here would be your sales budget. Number 15 question here is what will Whiting's total selling and administrative variable expenses be for May? Okay, let's go over the problem. Whiting Industries expects to produce and sell 3,180 units in May. Each unit costs 3.47 to produce and sells for 8.59. Okay, so the 347 is the production cost and the 8.59 is the selling price. Whiting sells its product to retail stores in sets of 4. Each set of 4 costs Whiting $1 to ship, so you have shipping cost of $1, and then In addition, sales commission equal 3% of the gross profit for each unit. Okay, what will Whiting's total selling and administrative variable expenses be? Okay, so uh, I would expect many to find this uh, harder than the other problems we've solved because number one, uh, it requires you to solve for your gross profit, and again, based on experience, many students will still forget how to solve for your gross profit. Okay, basically, your gross profit is your selling price less your cost of goods sold. Okay, so whatever you have sold, you deduct the cost of those goods, then you will get your gross profit. And that is basically why we are given the 3.47 and the 8.59. Again, as I mentioned earlier, the 3.47 is the product cost, which would be used for getting your cost of goods sold, and then your 8.59 is the selling price, which will give us our sales. Okay. And then maybe students will also get this wrong because of the shipping cost. They might have failed to divide it by 4 since the $1 shipping cost is not on a per unit basis, it's for a set of 4. Okay. Anyways, let's just do this step by step. You will produce and sell 3,180 units. Okay. So if we start with the uh, shipping cost, uh, you, one way of getting this wrong is simply multiplying 3,180 by $1. But again, the $1 shipping cost applies to a set of 4. So what do? You have 3,180 units to be sold. You have to divide this by 4. So you will have a total set of 795. Okay, and multiplied by $1, you will have a total shipping cost of 795. Okay, but aside from that, you will have to pay sales commission, which would form part of your selling and administrative variable expenses. Okay, so another possible source of error here is that you might fail to recognize that your sales commissions would form part of your selling and administrative variable expenses. Obviously, this is a selling expense and this is a variable expense since this is based on your sales. The more sales, the higher the sales commissions you have to pay. Okay. The same is true for your shipping cost. The more units you ship, the higher your shipping cost will be. Okay. But if you fail to include your sales commission, then you might have just answered 795, which is one of the choices in this problem. But aside from 795, you will have to add your sales commission. And again, remember the sales commission here is not based on the selling price. It tells you that it is based on the gross profit. Some problems, sales commission will just be based on the selling price, but here again, it is just based on your gross profit. And again, if you cannot recall on your own how to get your gross profit, then it's possible for you to get this wrong. But supposedly that should not happen because gross profit is a very basic concept. It's just your selling price minus your cost of goods sold. Okay, so let's do this. We can do this on a total uh, basis or simply per unit. Then just multiply with the total number of units later. Okay, so your selling price per unit is 8.59. Then you deduct the product cost per unit of 3.47. That means your gross profit per unit is 5.12. Okay, and since you will be selling 3,100 units, your total gross profit would be 16,281. Okay, and that would now be the basis of your commission. And since your commission is at 3%, the commissions that you will have to pay is at 3%. You multiply this by 3%, you would get uh, 488.448 or rounded up to 0.45. Then you add this with the shipping cost of 795. Your total selling and administrative variable expense for May would be 1,283.45, which is the first choice. Next, which of the following items is correctly paired with its location? Units to be produced, direct materials budget. Okay, that makes sense. Unit selling price, production budget. No, the selling price would not appear in the production budget. Total required units. Uh, Sales budget. No, the total required units would be also in your production budget. Total sales and direct materials budget. No. The best answer here would be the letter A, units to be produced, and the direct materials budget. Okay, because your units to be produced appears in the production budget and direct materials budget, and your direct labor budget. Next, 17. Which of the following statements concerning the relationship between the manufacturing overhead budget and production budget is correct? Okay. As budgeted production increases, the total budgeted fixed manufacturing overhead increases. That's false. Your total, regardless of the level of production, your total budgeted fixed manufacturing overhead will remain the same. As budgeted production decreases, the budgeted fixed manufacturing overhead per unit decrease. Take note, if it's on a per unit basis, now you can expect that there will be fluctuation for your fixed overhead. The total fixed cost would be the same, but on a per unit basis, obviously it would change depending upon the level of production. But the behavior is inverse. The higher the level of production, the lower the per unit fixed cost. The lower the level of production, then the higher the per unit fixed cost. Okay, because if you have fewer units to share in the fixed cost, then each unit will have a higher share. The more units to share, the lower the amount that each unit will have to share in the fixed cost. Okay, so let's check. Production went down. So what will that do to your per unit cost? It's not supposed to decrease. The fixed manufacturing overhead per unit should increase. So that means letter B is incorrect. As budgeted production increases, the budgeted total manufacturing overhead increases. This is correct. The behavior of your variable cost, whether total or on a per unit basis, is directly related to the level of production. The higher the production, the higher the variable cost will be. Whether your variable per unit would remain constant regardless of the level of production. It's the total that would increase or decrease depending upon the level of production. The answer here is letter C. As budgeted production increases, the budgeted variable manufacturing overhead per unit increases. No, again, it will just remain the same. 18. Determine the correct cost for Gabby's gifts using the following information. Materials 4,200, labor cost 160, depreciation. The company produced 400 ceramic pots in May. Question here is determine the correct cost for Gabby's gifts using the following uh, infor- uh, information. Okay, and the challenging part here is that we need to check these four. Okay, we're not only asked to solve for one. Uh, let's see. Fixed cost. Materials obviously would typically be variable cost. Labor cost also would be variable. Depreciation again is fixed. Rent would be fixed. Another fixed cost is obviously fixed. Okay. Wait. First choice here is fixed cost per unit. Let's get our total fixed cost first. our total fixed cost here would be composed of our depreciation of 800, and then our rent of 700, and then other fixed cost of 500. So our total fixed cost would be 2,000. Uh, and then divide by the number of units of 400. That means on a per unit basis, fixed cost is 5. Okay, so that eliminates the first and the third choice. Let's proceed to the second choice, variable cost per unit. Let's add all our variable costs, materials of 4,200 plus labor of 1,600. That's 5,800 divided by 400, since we're looking for the per unit. This would give us 14.5. Okay, that's it. Uh, that's the answer. Okay. The total cost per unit is not 14.5. That's just the variable cost. You will have to add the fixed cost, which was computed at 5 per unit. So if you would be asked how much is the fixed cost per total per the total cost per unit, your answer here would be 19.5. Okay, next, number 19. How does the selling and administrative expense budget differ from the direct labor budget? Okay, the difference is very stark, class. The question does not makes very little sense. Okay, but still, we have to answer this one. First choice, the direct labor budget is based on the number of units to be produced, whereas the selling and administrative expense budget is based on the number of units the company expects to sell. Maybe in that sense, it makes sense to compare selling and administrative expenses with direct labor budget. Okay, and that statement is actually true. Okay, direct labor budget is based on the units to be produced, while your selling and administrative expenses would be based on the number of units that will be sold. Okay, let's just go over the other choices. The direct labor budget is based on the number of units the company expects to sell. That's wrong. Third choice, the direct labor budget is based on labor hours. Could be, whereas the selling and administrative expense budget is based on machine hours. Not necessarily. Okay, and no, definitely not. Okay, machine hours would be part of your manufacturing overhead budget, not part of your selling and administrative budget. The direct labor budget is based on machine hours, whereas the selling and administrative budget is based on labor hours. Okay, that choice is still incorrect. Question 20. How many is the company budgeting to produce? Again, for me, this would just be an application of your common sense. Let's try to answer this. Uh, the company is preparing its annual direct labor budget. The company's total budgeted direct labor cost is 616,000. Okay, so uh, compared to the other problems, this is the first one wherein we will have to work back. This time we're given with our total budgeted labor cost, which is 616. Okay, then each unit requires 4 direct labor hours. Okay, and at $10 per direct labor hour. So if the total cost is 616, if you divide it by 10, the cost per hour, that means our budget, we are budgeting a total labor hours of 61.6. Okay, and then since each unit will require 4 hours, we further divide 61.6 by 4. That means we are budgeting 616,000 for us to produce 15,400 units. That's it. It's already the answer, 15,400. That is 616,000 divided by 10 and divided by 4. Okay, so you should be able to easily answer this if this comes out in the exam. Next, Gulf Coast supplies frozen shrimp to grocery chains. Let's read the question first. What is the total amount of budgeted manufacturing overhead for the quarter? Uh, it expects production of 380 tons and sales of 400 tons of shrimp in the uh, Next quarter, each ton requires 50 direct labor hours and employees are paid 15 per hour. Manufacturing overhead is applied at 120% of direct labor cost. Okay, since we're looking for manufacturing overhead and it is applied based on direct labor cost, we'll have to determine our direct labor cost first. Okay. Uh, so production is at 380, and then each ton requires 50 direct labor hours. So we'll multiply 380 by 50. We'll have 19,000, and then each employee is paid 15 per hour. So this would be 19,000 times 15. This would give us 285. This would be our labor cost already. And if we multiply this by 1.2, or since the application rate is 120% of the labor cost, this would give us 342,000. That is already the answer. 342,000. I'm not sure where you would find difficulty in this problem. Hopefully, you can easily answer this. Number 22. Hopefully, this would not be a long problem to solve. Uh, Question here is calculate the direct labor payroll for the two products for July, August, and September. Okay, and luckily for us, even if we are asked to solve for July, August, and September, we really just have to solve for one. Maybe we'll just solve for July. Since all choices uh, have different figures for July. Okay. If you have time, you might perhaps confirm confirm the answers for August and September. But for our discussion tonight, let's just do the July. What's happening here? Using a direct labor budget, compute for the direct labor payroll for the two products. Okay, what products do we have? Makes and sells two kinds of marshmallows. The third quarter production budget for each of the marshmallows is as follows. From experience, Fluffy's management knows that it takes approximately 12 minutes to make a bag of regular marshmallows and 6 minutes to make a bag of jumbo marshmallows. Fluffy pays its direct labor employees 18 per hour. Okay. To make a bag. So one bag. Uh, Perhaps the challenge here would be on the number of bags. Okay. A regular bag of 100. You will have 100 uh, for regular. Okay. That means I think the 150 and 50 is irrelevant here. Hmm, let's see. So for July, we'll be producing 3425. Okay. But we only need 12 minutes. So how many hours do we need? Uh, if we divide this by 60, okay, times 12, we would need 685 hours to produce the. Wait, is this the regular? Yes. We would need 685 hours to produce the 3,425. Okay, so please take note of the 685. And then for the jumbo, it's 2670, but let's divide this on 60 to get the per minute. And since we would need how many minutes times 6, we will need 2 167 hours plus plus the 685 for the regular, we will need a total of 952 hours. And how much are we paying for every labor hour? We're paying 18. So we would need 17,136, and that's already letter C. Okay, so if you have time, please confirm the other choices for August and September. Okay, because compared to the other problems, this is the first one wherein we would need lesser than 1 hour to produce one product unit. Okay, in other problems, we would need 1 hour or multiples, definitely more than one. Here, one unit can be produced at less than an hour. Okay, so my suggestion would be to divide it by 60 and multiply it by the number of minutes it will require to produce the unit, or convert the minutes into percentage class. Okay, 12 minutes is actually 20% of 1 minute, so you can just multiply 20% with 3,425, meaning you need zero point 0.2 hours for every unit. Okay. The 6 minutes would be 10%, so you can just multiply the 2,670 by 10%, so that your computation process would be uniform. But again, whatever works for you and whatever makes sense to you. 23. Uh, is 24,000 a similar problem to the other two other problems we solved? But this time, what is the question? Fixed cost. This time it's fixed cost. We've already determined that the rent, depreciation, and the 400 other fixed costs will comprise our fixed cost. So this would be 1 plus 900 plus 400 will give you 2,400. But since this is per unit, we divide 2,400 by 24,000. This will give us a fixed cost per unit in the amount of 10 centavos. So the answer here would be 0.10. Next, 24. What is the total amount of budgeted manufacturing overhead for the quarter? Manufacturing overhead. Okay. The company manufactures gourmet caramel corn, cheese corn, and other flavors of popcorn. It expects production of 266 cartons and sales of 280. Each carton requires 5 direct labor hours, and employees are paid 18. Okay, a variation of one problem we've solved earlier. Manufacturing overhead is applied at 120%. Very similar. Okay, we need 266 cartons. And how many hours do we need? We're solving for direct labor cost because the overhead is applied based on your labor cost. So 266 production units times 5 hours per unit, then times $18 per hour, you'll have 23,940. That's your direct labor cost multiplied by 120% or multiplied by 1.2. This will give us our budgeted manufacturing overhead of 28,728. 25. All of the following statements are correct except we're looking for the false statement. Total variable cost change in direct proportion to changes in volume. The total, yes, that's correct. Total fixed costs remain the same as volume changes. That's correct. Fixed cost per unit decreases as volume increases. Per unit will go down as volume goes up. That's correct. Variable cost per unit increases as production volume increases. That's incorrect. Variable cost per unit will remain the same. Okay, next, number 26. Uh, Plush Pillows Production manufactures premium feather pillows for a chain of mattress stores. The company plans to. Let's go to the question. Using manufacturing overhead budget, compute the company's manufacturing overhead cost rate per pillow and the total manufacturing overhead cost for the quarter. Okay. Cost per pillow. uh, manufacturing overhead. Okay, we already have the per pillow cost for our variable overhead. Remember the class that indirect materials and direct labor will form part of your overhead. Okay, very important. You might think that it goes to your materials or your labor, but indirect costs goes to your overhead. Okay, remember that your production costs are your direct materials, direct labor, and overhead. So if it's not a direct material, if it's not a direct labor, everything else related to the production, related to the cost of production would go to your overhead. So remember that indirect materials and direct labor will form part of your overhead cost. Okay. So basically, the challenge here would be just the fixed overhead cost. Okay. 80,000 pillows. Let's see. Salaries is 50, and then insurance is 4. Is this 80,000 for the quarter already? Yes. So 50 plus 4 plus 30 will give you 84,000. Divided by 80, this will give you a fixed cost per unit of 1.05. Okay, but that's not the answer because we will have to add the variable overhead uh, cost, okay, which is the indirect materials of plus 0.65 plus indirect labor of plus 1.45 and then plus the other overhead of zero point 0.9 which is 4.05. So the answer here would be 4.05. Okay. As to the total, let's see. Your total variable cost per pillow would be 0.65 plus 1.45 plus zero point 0.9. Multiply that, that will give us 3. Multiply that by 80. So your total variable overhead cost would be 240. You add that with the 84 fixed cost we solved earlier. 240 plus 84. This will give us 324. So indeed, the answer is letter B. 27. Direct materials per dress. Okay, low but okay. The company makes and sells bridal dresses, bridesmaids, etc. The company plans to produce 60 dresses during the next month and will require 390 yards of fabric for production. The total required for the month is uh, 429. Mhm. The total fabric required for the month is 429. Okay. What are the budgeted direct materials per dress? Okay, so it's just 390 divided by, you will need 390 yards for the 60 dresses. And that will give you 6.5. And the answer is already 6.5. That's it. Okay. Why will you not be using 429? The 429 obviously takes into account already uh, uh, the targeted ending inventory for your materials. Okay. But on a for your per dress, on a per unit basis, you just need the 390 and the 60 for which the 390 will be used. Okay, the 429 is not for the 60 dresses. It takes into account other dresses that will be produced in the subsequent month. Okay. So possible source of error here is that you would use 429 and then divide it by 60. That's incorrect. The 429 is not for the 60 dresses. It's the 390 that would be for the 60 dresses. The 429 already includes your inventory needs for materials, uh, which would also include which would include the subsequent month. 28. What was the cost of raw materials used during the period? Had a beginning balance of 71,200 in the beginning inventory. So we have beginning inventory of 71,200 and we're looking for the raw materials used. Okay. At the end of the period, the ending balance was 75,000. During the period, this is basic, the accounts. This is not a peculiar problem. Okay. Beginning inventory 71,200 and then you purchased 150, 700, and by the end of the year you had 75,000. That means you have used 146,900. And that's it. The answer is 146,900. And then 29, what is the company standard overhead rate per direct labor dollar, assuming all overhead shown above is variable? Standard overhead rate per direct labor, assuming all overhead shown above are variable. So basically, you're asked what's the application rate, how much overhead cost you will have per direct labor hour. Okay, so you just divide your total overhead by your total direct labor. Uh, so this would be total. We're already given with our total overhead of 32,750, and then just divide that with your direct labor of 28,500, and that will give you 1.149 or rounded up to 1.15, and that is already your answer. Meaning, for every $1 of labor, you will incur $1.15 of overhead. Okay. If you'll be asked how much is the application rate, it will be 115% of your direct labor. The overhead application rate is 115% of your direct labor. Number 30. Uh, Question here is, do you think this is the best way to prepare the budget? Why or uh, why not? Sarah is trying to prepare the manufacturing budget. She believes that the manufacturing overhead budget will be the most complicated, so she decides to tackle it first before the direct materials and direct labor budgets. Uh, Answer here would be letter A, no, because the manufacturing overhead budget depends on the direct labor budget, so the direct labor budget needs to be prepared first. Okay, that's usually the case. The overhead budget depends on the direct labor, so the direct labor has to be prepared first. Okay, so this is the answer. Okay. 31. What's the question? What will be the total manufacturing overhead budget be? If Malay expects to have 4,000 labor hours in the first quarter, 4,500 in the second quarter, and 5,000 in the third quarter, and 5,500 in the fourth quarter, what will be their uh, manufacturing overhead budget? Okay, let's get our fixed cost first. Okay, so we have 15 plus 2.4 plus 6.5 plus 4.7. The total fixed cost is 28.6. Okay, please take note of 28,600. Then multiply this by 4 since these costs are quarterly budget. So your annual fixed cost would be 114,400. Let's proceed with our variable cost. But before that, let's get uh, our total production budget first. How many units are we producing for the whole year? Uh, or how many labor hours are we needing for the entire year? 4,000 in first quarter, 4,500 in second quarter, and then 5,000 and 5,500 in the third and the fourth quarter. So total of 19,000 hours. Okay, then let's just add our total variable cost per hour, which we'll multiply with 19 later on. Uh, 1.2 for your indirect materials, 1.6 for indirect labor, utilities of 0.25, and then maintenance of 0.15, which will give you a total of 3.2. So 3.2 variable overhead cost per unit per labor hour times 19,000 hours. Our total variable overhead cost per a quart for the whole year already it will be 60,800. Okay, but that's not the answer because we'll have to add the annual fixed cost of how much was it? 114,400. So this will give us our answer of 175,200. 32, Jackie and Caroline are working together to develop the production budget. If Jackie is working on the direct materials budget and Caroline is working on the direct labor budget, what common information will they both need to complete their budgets? Again, direct materials and direct labor. Okay, the number of units to be sold, no. The selling price, definitely no. The machine hours used, no, that's not needed for direct materials. The number of units to be produced each period, okay. So the best answer here is letter D. You can argue for letter A because you would say that the number of units to be produced each period will depend also on the number of units to be sold plus the considerations in inventory. But the best answer here would be the number of units to be produced each period. 33, Gulf Coast. Supplies frozen shrimp to grocery chains. It expects sales of 400 tons of shrimp in the next quarter, and it plans to produce 380 tons during the same quarter. Each ton requires 50 direct labor hour. I think this is a uh, similar problem to one we solved earlier. Let's just see. Question is application rate of 120%. How much is the total amount of budgeted direct labor cost? So we'll have to ignore the overhead here since the question is merely on your budgeted direct labor. Okay, expects to sell 400 and plans to produce 380. Okay, ignore the units to be sold, but focus on the units to be produced. Okay, the reason that the number of units to be produced is lesser than the amount the units to be sold must be because of our existing beginning inventory. Uh, 380 times 50 per ton times 15 per hour. This would give us 285,000, and that's already the answer. Cupid Manufacturing, question first. What is the amount of total direct materials needed for production? Okay, Cupid, uh, is preparing materials budget. The company is budgeted to purchase 88,480. Uh, okay, the desired ending has budgeted to purchase 88,840. Okay, so normally we'll be solving for the amount of materials to be purchased, but this time the amount of materials to be purchased is given, but we are asked how much will be needed for production. Okay, if you recall, to get the materials to be purchased, you would need the materials needed for production minus the beginning inventory plus the ending inventory. But this time, we're looking for the materials needed for production. Okay. So if we are going to purchase 88,480, and then the desired ending inventory is 67,200, uh, what is the total materials required is 96,000. Uh, 96,600. I think 67. The total materials required. That would already be the needed in production and the uh, mm, ending inventory. So if we need 96,600 all in all, and we know that 67,200 would be set aside for ending inventory. That would mean that the amount that needed in production is 29,400. Okay, and that's it. It's simply 96,600 minus 67,200. Okay, because if you add your direct materials needed for production and your target ending inventory, that would give you your total materials required. Okay, so we actually another question here could be how much is in your beginning inventory. So if your total materials required is 96,600 and you're only purchasing 88,480, what does that tell us? That our beginning inventory 96,600 is equal to 8,120. If you are asked how much is the beginning inventory in this problem, if this will be asked differently, your answer would be 8,120. That's 96,600 minus 88,480. Okay, so from here, I'll just give you the answers. For number 35, the answer is the second choice, yes, because the manufacturing overhead budget depends on the direct labor budget, but none of the other budget depends on the direct materials budget. Number 36, the answer here is letter A, 115,924 January. Number 37, the answer here is 28,710. So again, as I've mentioned at the start, what you need for this topic is just practice. So make sure to answer these problems. Again, answer for 37 is 28,710. Number 38, it's 36,960. Number 39, it's 23,940. Number 40, it's 105,300. Number 41, that's 12,062.54 October and 12,562.54 November. For 42, it's 1,455,000 for September and 1,560,000 for October. For 43, that's 139,854. For 44, it's 142,000. For number 45, answer would be 3 pounds, the first choice. For 46, answer would be the last choice. The budgeted production needs will not equal the quantity of direct materials that will need to be purchased. As a result, the relationship between production needs and materials to be purchased is production needs plus ending inventory minus beginning inventory is equal to materials to purchase. Number 47, letter C, 0.85 per direct labor dollar. 48, a decrease in required ending inventory. 49 is the last choice. Variable manufacturing overhead would be your direct materials, direct labor and utilities. Your fixed manufacturing overhead would be your property taxes, insurance, depreciation, and salaries. For number 50, it's 42,000 yards. For number 51, it's 10,890.69. For number 52, it's 40,200. For number 53, it's 269,240. For 54, it's $24. For 55, it's $60. For 56, answer is the second choice, expected unit sales and production budget. For 57, it's 2,400. For 58, answer is the third choice. They are both calculated based on the number of units to be produced. For 59, answer is 15,894 yards. For number 60, answer is 225,450. For 61, it's 200,970. For 62, it's 42,320 wheels. For 63, the answer is the third choice. As beginning direct materials inventory increases, the amount of materials to purchase increases. For 64, it's 231,000. And then for 65, answer is 15. Okay, so hopefully you would continue answering the remaining problems.